take the discussion forward now on autos. Now, yesterday, Maruti Suzuki announced sizable price reductions across its portfolio. So, entry-level models like Alto, Espresso, Celerio have seen price cuts ranging from 13 to 22%, while even some of the larger models like Brezza, Grand Vitara, the cut in prices is a little more moderate. But as you can see, for Brezza, it stands at close to about 12%. Now, the big question is, will these lower prices on account of this GST pass-through actually stimulate buyers? Maruti Suzuki has been talking about how entry-level mass consumption has been hit. Jay Kale, Executive Vice President Research at Elara Capital, is now joining us on the show. Jay, morning. Thank you very much for joining in. First, give us your comment on the price cuts announced by Maruti, and how does it compare with the other passenger vehicles who've also announced a cut in prices?
Yeah, hi, good morning. So yes, Maruti has cut its prices, passed on the GST benefit, and over and above that also cut its prices, especially for the entry-level models. We have seen entry-level models being under pressure for quite some time now, also because of the affordability issue. So I think this is the right time for the management to kind of spur demand over there and get the first-time buyers back into the market. And what better way to do it during the festive season? So I think, yes, you will have some bit of spurt on the first-time buyers because of this price cut. And that will also lead to better utilization levels for the company, which could cushion any kind of margin impact because of these price cuts that we've seen.
So, Jay, you said that the price cuts are a combination of GST pass-through plus additional discounts. Do we know the extent of the additional discounts that Maruti Suzuki has priced now, and what will be the impact on margins? Will there be any impact, or do you think higher volumes can offset that?
So, broadly, they've cut prices in the range of, on the entry level around 50 to 18% odd types. Because we have to see the base variant versus base variant price cuts and not up to the price cut that they've given in the press release, because that seems to be a little higher. So, around 17-18% broadly, as per our calculations, is the price cut of the entry level like-to-like models. And normally you would have expected around 8 to 10% odd price cut because of the GST benefit. Of course, there will be some tweaks in the discounts as well. Some reduction here or there is what our expectation is. Net, we don't see much of an impact on the margins because of this price cut, as it will be a kind of offset because of better utilization levels if the volumes bounce back.
What were your volume estimates, and have you revised it higher?
Yeah, so we've recently revised our estimates for the entire auto sector in the range of, we've increased our estimates by around 5 to 15% for most of the OEMs. And of course, the incremental delta is coming mainly because of passenger vehicles. We see that incremental delta in growth to be higher for passenger vehicles, followed by two-wheelers.
Okay, and can you, this 5 to 15% increase in volumes for passenger vehicles, can you break that down in terms of which of the companies have seen the maximum increase in volumes? And what about Maruti in particular, especially post these cuts?
No, so the 5 to 15% that I mentioned was the EPS upgrades. The volume upgrades have been in the range of 2 to 4%, more for the passenger vehicle industry than for the two-wheeler industry. And also the EPS upgrade is higher also because we expect a lot of upgrades to happen within the passenger vehicle industry as well. So if someone was going to expect to go for a mid variant, they'll go for a top end variant. So the mix is expected to improve for the industry, which will also lead to higher ASPs as well as margins. And that's why the EPS upgrades are higher than the volume upgrades.
Mm. Jay, I just want to ask you about another stock, Hyundai. If you have a view out there, the reason I asked you this is because around 12 months or so ago, the stock listed. No one was interested. There were various red flags with regard to the big dividend payout to the promoter, the risk of royalty, and various other red flags were pointed out. The stock then came down to, I think, 1,500 rupees odd, but it's making a fresh 52-week high. At current juncture, at around 2,700 rupees, do you think most of the good news is in the price, if you have a view on the stock?
So I think, we don't have it in official coverages yet, but point is that Hyundai is also a beneficiary of the passenger vehicle industry bounce back that we are seeing. It has a slew of launches, its capacity is coming in. So incrementally, things are looking good for Hyundai in terms of both model launch cycle as well as capacity increase. and that is kind of timed well with the GST cut, so to say. So yeah, things are looking good, but I wouldn't have a target price to as of now to give you.
What would be your top pick in passenger vehicles and then for two-wheelers?
So the top picks are Mahindra, Maruti, and TVS. The preference after the GST cut shifts a little more towards the passenger vehicle industry over two-wheelers, but TVS remains the top picks in two-wheelers.
Okay, and between M&M and Maruti, if you had to pick one?
Well, I think I'd pick both, given that one is a beneficiary. There are substantial volume upgrades likely to be seen in Maruti, and mixed benefit will be seen in Mahindra, where they had a kind of already expectation of 15 to 20% volume growth for them was already built into the estimates.
This Maruti also, there was this launch, right, a couple of days back of Victoris. And I think they've announced a price of about 10 to 17, 18 lakh for the petrol variant. I mean, is that going to be a game changer? Are you expecting this to incrementally add considerably to their volumes? And will it in any way, undermine Grand Vitara?
Yes, I think whenever such kind of a model is launched, there is a natural cannibalization, and that is expected. But of course, Victoris is going to be sold in Arena channel, Grand Vitara, and the Nexa channel. So to that extent, there will be some bifurcation. But we've seen Victoris features. I think the ADAS level 2. Maruti has gone all hog in terms of giving connected features for this vehicle. They've given the CNG a new design and architecture for the CNG kit as well. So I think pretty good volumes expected from Victoris, and in the mid-size SUV segment, which has led the growth for a few years now. I think this was long pending. Also, we're expecting better margins for Victoris for Maruti. So cannibalization will happen, but net it will improve their mid-size SUV market share in RV.
Appreciate you joining, and Jay, wishing you a good Friday ahead, and we look forward to chatting up with you as things evolve on ground. A lot of excitement post this GST rationalization. Let's see how demand picks up post that.
Right now.